Imagine investing $50,000 into one relatively unknown monthly income ETF today and potentially turning that investment into more than $7,000 in monthly income 20 years from now. Sounds almost too good to be true, right? Well, that is exactly why I went looking beyond the usual names everybody talks about. If you are tired of seeing the same 5 or 6 ETFs recommended over and over again, you'll want to pay close attention to today's list, because in this video, I'm revealing 7 monthly income ETFs that are still flying under the radar, funds that are building their track records, generating monthly distributions, and, most importantly, showing something I believe every income investor should care about: growth. And that's where this list gets interesting. I didn't simply search for the ETFs with the highest yields. In fact, I eliminated 2 funds with eye-catching yields because their share prices had actually fallen over the past year. Why? Because a huge yield doesn't automatically mean you're making money. If a fund pays you 10%, 12%, or even more, but your investment loses significant value at the same time, you have to ask yourself, how much of that income are you really keeping? That's why every ETF we're looking at today had to pass a much more important test. It needed to demonstrate positive growth while also producing monthly income. We're looking for the combination that income investors ultimately want: cash flow today with the potential for capital appreciation tomorrow. And stay with me until the end, because I'll show you exactly how that $50,000 investment could potentially grow into a portfolio capable of generating more than $7,000 a month in income. If financial freedom is one of your goals, this is the video you don't want to miss. Welcome to Investments Mindset, where wealth builders come to get inspired. Before we continue, please note that we are not financial advisors. The content on this channel is for educational and informational purposes only. It is not intended to provide investment advice or recommendations regarding specific securities or investments. Always conduct your own research or consult a qualified financial professional before making any investment decision. Every investment involves risk. Let's dive in. So let's get into these 7 ETFs and see which one could be the most interesting addition to an income-focused portfolio. But I do have to give you a real honest warning before we get into this. These are not your 10-year-old, battle-tested, Grandpa Owns-It funds. Most of these launched in 2023 or 2024. They are new. They are exciting. They are producing numbers that are frankly a little jaw-dropping. But because they're new, you have to manage your position size. Do not take your entire retirement account and dump it into a fund that's 18 months old, no matter how good the chart looks. Start with a piece of your portfolio you're comfortable growing over time, dollar cost average into it if that fits your style, and let these newer names prove themselves right alongside the more established stuff you already own. That's not me being negative. That's me wanting you to still be here with me in 5 years, still compounding, still winning. Let's start with number 7, and this one is the appetizer before things get really interesting. Kicking things off at number 7 is TUGN, the STF Tactical Growth and Income Fund, the veteran of today's group. This one has been quietly building since it launched back in May of 2022, so it actually has more runway under its belt than most of today's list. It carries a 0.75% expense ratio and paid $3 per share over the past year, yielding 10.89%, all while the fund still managed real price growth on top of that. That combination would give you a 35.79% total return over the past 12 months, with a strong 10.71% move in just the last month alone and 15% already year to date. This is the kind of fund where you can take that 10%, reinvest it, and let it compound right alongside the growth. If you want a monthly payer for your growth bucket instead of your pure income bucket, TUGN earns its spot at number 7. But guys, this is just the floor of today's list. Every single fund from here gets stronger, and number 6 proves it immediately. IWMI, the NEOS Russell 2000 High Income ETF, is where small caps come out swinging. Small caps have been putting on a show lately, and Neos knows exactly how to structure an income fund around that momentum. This fund is running a 0.68% expense ratio, paid $7 per share for a 13.66% yield, and stacked a 17.85% growth rate on top of it for a 36.11% total return over the past year. Year to date, it's already up 12.20%, and since its June 2022 launch, it's averaging 18.18%. Small caps plus monthly income plus real growth. That's why IWMI locks in at number 6. Now, if small caps got your attention, wait until you see what an entire sector can do. Number 5 brings the sector play, the Westwood Enhanced Energy Income ETF, ticker symbol WEEI. This might be the most underrated name on this entire list. If you've ever said you wanted energy exposure in your income portfolio, this is basically the sector packaged up for you. It launched in May of 2024, carries a 0.85% expense ratio, and paid out $2.70 per share for an 11% yield. Here's the number that impressed me: 21.97% growth on top of that yield for a 37.98% total return over the past year. This fund had a strong 6.79% move last month and is already up over 20% year to date. I think this one is priced a little rich right now given how young it is. So if oil settles down and you get a dip, that's your window. But make no mistake, the underlying performance here is real. Now we're stepping out of energy and straight into the heart of the market, big tech. Number 4 is where the numbers start getting even more impressive. The next fund is none other than the Curve Technology Titan Select ETF, ticker symbol KQQQ. This fund leans into the biggest names in tech, north of 20% combined in names like Apple, Microsoft, Nvidia, and Google, with the rest rounded out by names like Amazon and Meta. But it's not locked into the Magnificent 7 label. It can rotate as opportunities shift. The expense ratio is 0.99%, and it paid $4.19 per share, yielding 13.61%. Add in the growth, and you land at a 43.33% total return over the past year, including a stunning 13.99% move in just the last month. This is a fund that works whether you're building your growth bucket or your income bucket, and since its July 2024 launch, it's averaging a 25.28% total return. That's a serious number for a fund this young. And if a basket of tech giants can do that, imagine what happens when a fund bets the house on just one of them. Before we continue, if you find value in this video, even just a little, please subscribe and hit the like button to help us continue to provide more insightful and educational videos. Your support is highly appreciated. Thank you. That brings us to number 3, and this is where things get bold. The Curve Yield Premium Strategy Apple, ticker symbol AAPY. This one is built primarily around long-term Apple exposure, typically 80% or more of the fund, backed up with smaller positions in names like Microsoft, Nvidia, and Google. So you're not entirely riding one company. It's still small, only about $6 million in assets and 230,000 shares outstanding. So I'd keep an eye on liquidity here, but the numbers don't lie. An 11.36% dividend yield combined with real price growth delivered a 43.69% total return over the past 12 months, with an 18.76% move in just the last month and a full recovery of its early year losses, now at 14.09% year to date. Since its October 2023 launch, it's averaging 19.42%. That's a solid, sustained performance from a fund that's just over 2 years old. Now, we are officially in the top 2, and things are about to get even more impressive. Number 2 is the one a lot of you have been begging me to cover, EGGY, the Dynamic Income ETF. A lot of you have been asking me about this one, and I've been telling you I wanted to watch it cook a little longer before I fully jumped in. Well, it's cooked. EGGY is running a 0.92% expense ratio and paid a distribution good for a 26.20% dividend yield. one of the strongest yields on today's list, and it still managed a 10.32% growth rate on top of that for a 47.07% total return over the past year. Last month alone, it moved 17.22%, and year to date, it's sitting around 26.8%. This fund launched in December of 2024, so it's still building its long-term track record, and since inception, it's averaging 32.6%. Can it keep this pace up? The chart says it still has room to run. High yield, real growth, no erosion. And now the moment you've been waiting for. Number 1, the best fund on today's entire list, the Curve Yield Premium Strategy Google ETF, ticker symbol GOOP. Here's why this one takes the crown. Google is not slowing down. They are one of the most aggressive players in the entire AI race right now. And every time they push out any new update for their AI tools, the market takes notice. GOOP is built primarily around that Alphabet growth story, and the numbers back it up in a big way. The fund carries a 0.99% expense ratio and paid $5.05 per share, yielding 11.37%, and I want you to notice something. That yield is the smallest of anything in our top 3. That is intentional. This fund is not chasing yield. It is chasing growth, and it delivered 78.36% price growth over the past 12 months. Combine the income and the growth together, and you are looking at one of the most complete total returns on this entire list. Year to date, it's already up 21.04%. It moved 16% within the past 2 months, and since its October 2023 launch, it is averaging 45.34% per year over 2.5 years. That is a phenomenal, sustained run for a fund built around one of the world's most dominant companies right now. So let's have some fun and talk about what GOOP could actually mean for your income if you put real money behind it. Let's say you took a one-time $50,000 investment and dropped it into GOOP today. I want to walk you through what that could look like if this fund keeps performing anywhere close to how it has, and I'm going to use a more conservative growth assumption than its actual track record, because I never want to hand you a fantasy number. Let's model this using a 15% blended annual total return going forward, reinvesting your monthly distributions right back into the fund the entire time, rather than the 45% it's actually averaged so far. Even at that more grounded pace, here's the path. After 10 years, that $50,000 could grow to roughly $202,000, which, at an 11.37%, would generate nearly $1,900 per month in income. Now, if you push it all the way to 20 years, you could be looking at over $818,000 in portfolio value, generating close to $7,750 a month. And if you had the patience to ride this all the way to 30 years, that original $50,000 could be worth over $3.3 million, yielding over $31,000 a month in income. Now guys, I have to be straight with you. This is a projection, not a promise. GOOP has only been around since late 2023, so we are extrapolating a young fund's early performance out over decades. And markets do not move in straight lines. Tech leadership could change, AI hype cycles may cool off, and a fund this concentrated in one company's growth story carries real concentration risk. This is exactly why I told you at the top of this video to manage your position size on newer funds like this. A $50,000 one-time investment into a single ticker is a real bet, not a diversified retirement plan. Treat a projection like this as a what's possible if things go right, not a here's what will happen. So there you have it. All fresh names most of you had never heard of before today. Let me know in the comments which one of these you're adding to your watch list. And if you want me to keep hunting down these newer, lesser known names instead of the same 5 funds everybody already talks about, tell me down below. If you're serious about building real wealth, then consider this channel your financial gym. Every video is a workout for your portfolio, your mindset, and your money skills. If today's video helped you level up your financial education, even just a little, please smash that like button and subscribe so we can continue to grow and build wealth the smart way. And hey, if you want to know the 4 unique ETFs that have outperformed 99% of investors in 2026, or the 3 Fidelity ETFs that could turn $10,000 into a whopping $1 million, check out the videos on your screen right now. Thank you, my friend.